Okay. Well, welcome. I'm Sevin Yeltekin, the Dean of the Business School, and I am delighted to welcome you to this event and to this conference and the panels and the keynote speech, which will take place afterwards as well. So a very warm welcome to our alumni, our students, our faculty, conference presenters, and participants and practitioners, and we're delighted to have you here. I want to also acknowledge the great partnership we have with University of South Carolina, who is a co-sponsor of both the academic conference and this particular event as well. Well, the title of this panel is International Business in a Turbulent Era. It is certainly a turbulent era, at least for a lot of us in our lifetime, and highly relevant given the global uncertainty and the transformation we're all facing. We're delighted to welcome you as a part of the Cyber Conference and the National Cyber Program. The GW-CIBER is a part of the U.S. Department of Education Center for International Business Education and Research Program. That's what CIBER stands for, a network of 16 national resource centers. And the mission is to strengthen U.S. competitiveness abroad through education, research, and outreach. Our current grant theme is institutions, resilient globalization, and sustainable competitiveness, which you will hear from our panelists here today, how to navigate those waters. And at GW, CIBER builds on the strengths of our international business department and enhances GW's global footprint in research, teaching, and engagement. For our students, beyond studying abroad, CIBER creates hands-on global opportunities, whether it's through consulting projects, internships, international case competitions, industry treks, and virtual cross-border teamwork. For our faculty, it provides professional development, fresh teaching approaches, interdisciplinary research support that respond to the global shifting realities. And for the wider community, we're really delighted to have partnerships with business leaders, policymakers, minority-serving institutions, and community colleges, expanding access and impact far beyond GW. The world faces a lot of challenges. It's wonderful to be able to put all our heads together to certainly tackle them. And there's been an enormous amount of impact in the last 20 years. 249 research projects funded, 81 PhD students trained in the theme, close to 1,500 language faculty and 1,300 business faculty across the US trained through GW-CIBER programs, 82 new and enhanced international business courses developed, 1,300 students engaged in global projects, internships, treks, and programs across 40 countries, and close to 8,000 professionals reached through policy and business programming. So these numbers represent real lives changed and real impact and the contributions to the US global competitiveness as well. Collaboration across the CIBER network is the hallmark of CIBER, from joint research initiatives to shared professional development programs. CIBER is partnered with many international organizations, trade associations, think tanks, trying to amplify the impact beyond any one university. So it is definitely a world that needs more collaboration, and CIBER certainly has been leading in that way as well. It is a turning point for many institutions and many funds and many outreach programs at this point in time in the US. And certainly these funding challenges we're not immune to them as universities and higher education institutions. And it happens to be a particularly difficult time right now as well. So it's doubly important that you're here to support this event and you're here to advocate for its continuance. So I just want to thank you again for being here as colleagues, alumni, partners, for your support in this critical moment. And I hope that not only you stay through the next panel, but also through the insights that will come from Akhtar Diop, the Managing Director of the International Finance Corporation. And We want you to see these events not just as an event only, but as a conversation, and also a call to continue to build resilience and global competitiveness. So thank you, and we will now start our panel discussion. Welcome. My mic is on, hopefully. There we go. Okay, so I would like to start with introducing our panelists. We're going to give you some short introductions. Just to my left here, we have Orlando Ferreira. He's the Chief Finance and Administration Officer of IDB Invest, based in Washington. He manages the financial resources of the institution, overseeing multi-billion-dollar sustainable bond programs with a career spanning senior roles at the IDB Group and prior private sector experience in Paraguay. Orlando is a leader in sustainable finance and development impact. Orlando is also an alum, earned his MS in finance from the GW School of Business in 2004. Welcome, Orlando.
Thank you very much.
And to his left, we have Ken Chaletzky, an entrepreneur and longtime GW alumnus. He co-founded Copy General, growing it into a network of nearly 50 facilities across Eastern Europe after the fall of Berlin Wall. Talk about turbulent times. Ken remains active in international business ventures and community service with a unique perspective on building businesses across borders. Ken earned his BBA from the GW School of Business in 1971, so another proud alum. Welcome, Ken.
Thank you.
All right. And to his left, we've got Belma Ambrose. She's the Managing Director of Global Counsel. She leads their US office in Washington, D.C. after beginning her career in London advising corporates and, on trade, sustainability, and market entry. With earlier roles on Capitol Hill and at the State Department, she brings deep expertise in government affairs and international policy. She's also a proud GW alumna, holding a BA in International Affairs and Asian Studies from the Elliott School in 2009 and an MA in International Trade and Investment Policy, also from the Elliott School in 2013. Welcome, Belma. Okay, and last, but of course not least, we have Slim Feriani. Dr. Feriani is a global investor, former minister in Tunisia, and most recently the CEO of the Djibouti Sovereign Wealth Fund. His leadership has spanned sovereign wealth fund management, fintech innovation, and investment in frontier markets, and he has lived and worked across 3 continents, and is our furthest traveling panelist here, having just arrived from London a couple of days ago. He's also a GW alumnus, holding both an MBA and a PhD in finance from the School of Business, and we're delighted to have you here too. Okay, well, I think as a kickoff, we should perhaps start with defining what turbulent means in 2025 in this particular time, because you've all had your share of turbulent times in your careers. So perhaps we'll go in the opposite direction, and we'll start with you, Dr. Ferrari, to tell us what you define as turbulent these
Thank you. Thank you very much, Dean Yeltekin, for the kind introduction. Thank you, GW-CIBER. Thank you, GW, for inviting me back. Yes, I am a proud GW alumnus, and my professional journey started right here on this campus before taking me from the US to Europe, to London, the city, the financial center of London, then Africa and beyond. Finance is global, and so are careers. And I've had the privilege of serving as a professor here at GW, then as a global investor and CEO and government minister, most recently, as you said, yes, CEO of the Sovereign Wealth Fund. And each role taught me one thing: turbulence is not a choice, it's a constant. And it also creates opportunity. So when I think of turbulence in 2025, it's not only the shocks themselves, really, but it's the speed and intensity with which they ripple across markets. 25 years ago or so, I mean, a trade dispute here or interest rate hike there might take a few weeks to have an influence on emerging markets, for example, as the risk asset class. the contagion effect, as we call it. Today, it's instantaneous. The impact of or the contagion is really immediate. Capital flows shift overnight. Currencies swing in hours. So turbulence is no longer episodic or cyclical. It's really structural, and that's what keeps, I think, leaders awake at night.
Okay. Belma, do you want to?
Yeah, absolutely. I love what you said about turbulence being a constant. I think for us, and to give you a little bit of background as to what Global Counsel does, we're a strategic advisory firm. We work with corporate clients, we work with investors to help them really think about how they navigate policymaking, how they navigate the policymaking process. For us, and to piggyback on what Slim said there, turbulence is, in fact, the new normal, and it has been for some time. I want to go back to an experience that I had sometime 10 years ago. I was in the UK in 2016. Brexit comes about, the Brexit referendum, really triggering kind of a period of turbulence and an effort by voters to really, get their voice heard as far as what they wanted to have as the relationship between the UK and the EU, but almost certainly the rest of the world as well. And then a few months later, something happened in this part of the world that we all well remember, which is, we had the outcome of the 2016 presidential election. And on our point, and again, to add to some of the themes that you pulled out there, it's been 10 years of turbulence, and it's intensified to the point in which we are now. And one way in which we've thought about framing it, what term do we give this period of time, is, well, we've used a phrase, not just one word, but the end of peak optionality, which sounds quite big and whatever you want to call it. But to describe what that means, prior to 2016, we had the multilateral system as a way of resolving those disputes. We had the US as a leader in the world, again, kind of setting the frameworks in which business could operate. Corporate clients, multinationals could go and establish their supply chain, make an investment with a level of certainty as to what that would look like. Mm-hmm. Over the course of the last 10 years, we've seen that those flare-ups have become more frequent, and there's less of that seamlessness, that cross-border movement is less certain than it was before. And so that's what we mean by the end of optionality, that the options that were available are now far more siloed, far more triggered by politics. We're going to talk about tariffs, we'll talk about export controls, we'll talk about localization, we'll talk about investment screenings. All of those are now driven by politics. And so the turbulence that we all expect to come or to exist at all levels is now even more diverse, I suppose, as to where it's coming from. So I guess that's enough to keep anyone awake at night. And so yes, that's how we're thinking about this.
So Ken, you made it through some turbulent times in the middle of trying to establish, right, during the Berlin Wall. So what's the general theme of approaching these? What makes you be able to fall asleep at night, I suppose,
well,
is the question.
I sleep pretty well. I hope I don't fall asleep here. Unlike most of my colleagues here, who are more of a macro level, we're very much at a micro level. I mean, we started with one copy shop. That's C-O-P-Y, not coffee. Everybody thinks I opened a Starbucks or something. In Budapest, when people thought that was a crazy thing to do. The Berlin Wall had come down. We saw an opportunity. Actually, another friend of mine from GW was the one who invited us to join him in this venture. We saw the Soviet troops leave Budapest as that was ending. And this was a country where prior to the fall of the Soviet Union, people couldn't go into a copy shop and make copies themselves, something we take for granted. Copy machines were licensed. You had to have special permits to have one because they didn't want you to be able to spread information that they weren't aware of. So all of that changed. And when we opened our first store, there were literally people lined up outside the door and down the sidewalk just to have the experience of making a copy. Some people just came in and looked. They didn't do anything. They just wanted to see it. So we dealt with that and the expectations of people who felt that, oh, we're Western now. We're going to have everything that they have in the United States. And of course, that didn't happen. So managing expectations and working with the people that were there, not trying to impose an American way of doing things on them, but adjusting what we did so we would work with everyone else. Now, time has gone, and we were at one point in 6 countries, employing over 600 people. Hungary was one of our major locations, and now we have a Putin look-alike running Hungary. Orbán Viktor, the Prime Minister of Hungary, has changed the atmosphere there, and we just had to adjust with it. And then, of course, you can only imagine what happened in, a couple of years ago when the war in Ukraine started, and our company was taken from us in Moscow, as was our real estate. Hard to plan for things like that. So we've been through some exciting times.
And talk about some exciting times in different parts of the world. You've had your share, Orlando.
Certainly. Just wanted to say that I'm really happy to be back at GW. I blame GW for opening the doors to the career I have now, so it's always...
we'll take the blame. Thank you.
It's always a pleasure to be here. I've been in the multilateral world for 26 years now. I don't remember a year where Turbulence wasn't part of some part of the region. We work, so IDB Invest is part of the IDB group. We are the regional development bank for Latin America, so we work in 26 countries. And you can see the Brazils and Mexicos of the world, the Colombias and Ecuadors of the world, and then the Barbados and Paraguays of the world. So there's always some place where conditions aren't what we expect. Certainly we're seeing now the issues of trade volatility and regulatory fragmentation and certainly increased capital costs. Overall, the region seems to be stabilizing. Growth rates are back to historic levels. Inflation, with the usual exceptions, is getting under control. But the big problem that we see right now is really productivity and how we can continue serving the region. I think, and I'm sure that any of my colleagues from IFC and the World Bank and the African Development Bank and the Asian Development Bank, all of our colleagues will feel the same. The big challenge is how can we keep creating these tailored solutions that will help the companies in the region. In our case, obviously, we work with the private sector, continue operating in more difficult conditions, and how can we adapt ourselves to serve the region better. So it's not that it keeps me awake at night, but it keeps me entertained during the day, I guess.
That's a wonderful way to certainly put it. Talking about how the companies need to adjust, and Belma, obviously, with Global Counsel, you're doing a lot of work with different groups and different companies to try to, help them with strategies to manage political risk, tariff risk, trade risk, and what are some of the strategies that our companies are using? Can you speak to that for us?
Sure, happy to. Our standing view is to tackle political risk and to think about political risk in context of one's political brand. I know I'm sitting here with a whole bunch of students from who study political science and international affairs and business. So I don't think I need to explain political brand too much, But just for the sake of the panel, we define political brand as, the identity and reputation that a company has vis-a-vis its stakeholders in politics, in the wider policymaking process, amongst the regulatory agencies, but equally the other influential voices that help to shape policymaking. So whether that's think tanks, whether that's academia, whether that's trade associations, what have you. There's a set of stakeholders that companies need to understand, both how they're perceived and to ensure that there's an opportunity to also have a narrative that is conducive to speaking to these stakeholders, to having a position, to knowing that they understand your incentives, they understand why you happen to be in that market, they understand why you're looking to share your perspective on a potential policy change, why you're wanting to be part of that process. And our starting off point really is, if your political brand is misunderstood, then there's very little space for you to get a fair hearing when it comes to those stakeholders. And so for us, and the advice that we provide to our clients, it really always starts there. What does your brand look like? And then to craft a strategy for deploying that brand when it comes to tackling risk, whether it's political, whether it's whatever it might be. So that's where we start off. What does that look like in execution? Yeah. Well, it can be any combination, but really it comes down to, I can start off. There's a trend at the moment for a chief political risk officer. To effectively come into multinational companies and look across a set of functions that we've all come to know. So government relations, communications, regulatory affairs, corporate affairs, whatever it might be. And it's not to displace the efforts of those functions, but it's really to take the knowledge when it comes to geopolitics, to trade policy is political now, so to understand how trade policy is being made, and to really look to then deploy those functions in the right way, so that it's really about getting the message across as to what you, Company X, are looking to achieve in market Y, and do your stakeholders in that market understand why you're there? What is it that you're looking to achieve? So I'd say that's one part. And then certainly there's the other part, which is where we come in, and that's where we work alongside many of these teams to really kind of pull together the scale that we're able to afford. We have people across the world who are both tracking from a policy perspective, a market perspective, and kind of sharing that insight with clients so that we can add to that understanding. So for us, that's the strategy, and that's part of the execution. And of course, everyone here in this panel has actually the opportunity and the experience of having had to lead a business that's exposed to political risk. But really, for us, that's the starting off point, and that's the space that we really focus in on when we talk about.
So let me ask a follow-up question, which I think is also relevant for many companies in the United States right now, and also for higher education institutions, which is not having a political brand an option these days? Or is not having a political brand a brand in itself? So I know there's a lot to unpack there.
Exactly, and it comes down to you need to have a political brand, and you need to know when to deploy the tools in your arsenal and whatever that brand is that you've built up. And I would say that these days it comes down to, again, how well you know those stakeholders, and whether you choose to engage or whether you choose to remain arm's length. It's about deploying rather than having. You need to have one. The question is, when do you choose to communicate? When do you choose to engage? And that's the next phase. That's the tricky part, and that's the part that these days our political environment makes quite a difficult, judgment to make. I mean, just to add one additional point, we work with US companies that have a strong presence in DC and understand these things better than anyone. But we equally, we work with international companies that don't have that presence, and they are, it's very difficult to know
Struggle.
how to make that step.
Well, if it's difficult enough for large companies even, or international companies that might have resources and people and chief political officers, for entrepreneurs, is there any hope, or should we all pack up and go home in turbulent times and have a big sleep?
No, it's always been turbulent. Clearly now is a little more different than others, especially for those of us in Europe. Fortunately, our three major countries, the ones that are remaining, are all part of the EU. So we benefit from that. We joined the EU, I think in 2003 or 4, was when Poland, the Czech Republic, and Hungary became part of the EU. So we're a little protected that way, because most of our business is either in the country we're in, or since we can trade across borders without any tariffs or duties, it works fine. The question was originally proposed, I thought about it long and hard and asked a couple of friends of mine what they did, especially these were people who were in large multinational companies. And I asked them, how are you dealing with these turbulent times in different countries? And they basically said, things really haven't changed for us. We go where the business opportunities are. Those things may change because of some of these things, but we go where the business opportunities are. And I followed that up with, we go where the business opportunities are, as long as we don't have to compromise our moral standards. So we won't kowtow to some high up in the government in order to stay in business if it's not the right thing to do. We just don't. And we've lost some business because of that. As I've mentioned to some people, we learned how, one thing I never learned in business school was how to deal with the Russian mafia. That I had to learn on my own. That's a story for another day. But you, as long as you're willing to work hard, focus on your business and not compromise your moral standards, you can do business almost anywhere and be successful.
Is there a difference now? I mean, when we were talking about your earlier experience with the Berlin Wall coming down, one can describe that as a sort of a moment of, liberalization, more market forces coming in, whereas what we're maybe watching right now is a clamping down and a nationalization. So it's going in opposite directions. I mean, you mentioned those three sort of Eastern European countries now being part of EU, but if we were to try to at least think about other places where that scaffolding is not there.
Well, I can tell you that the EU is probably rethinking having let Hungary in. I think they'd like to get them back out. I just have to, I don't want to sound too like I'm beating the same drum, but we faced an irrational exuberance almost when we first came in, because everybody was so excited. We're free, we get to do everything, and they expected things to be immediately so much better, and they weren't. It took a while, and for some people it never got better. I remember we had one young lady who worked for us. We had a policy in our company. We never stayed in hotels because we weren't going to stay in a hotel where the room cost as much per night as some employees were making per month. It just didn't set the right example. Plus, we felt we needed to be among the people. So we were. We lived in apartments. I stayed with this family. And this young lady who worked for us, her job was to find me the family to stay with. And we were chatting, and I asked her about how things are going. And admittedly, this was maybe 25, 28 years ago. And she said to me, in the United States, you work hard and things get better. But here, we work hard and things stay the same. And that's the mentality we were fighting, and that's what we needed to change.
Yeah, that's the difficult mentality, and that's one that we see in a lot of also emerging economies, right? Some of these economies that you were talking about, my own home country, Turkey, we've gone through moments of great economic kind of progress and then moments of very difficult economic outlooks as well. And right now, too, we have tariffs, high interest rates, political risk. So this is changing all of possibly the investment strategies in emerging markets. And maybe you would like to talk a little bit about that, Slim.
It's fun. It's great fun. Don't get bored. But yeah, I mean, we live in a world of higher and volatile interest rates, trade. I think frictions are part of the game today, geopolitical shocks. So global capital is far more selective, and the emerging markets are competing harder. I mean, there's so many of them. There are about 200 countries in the world. Only about 20 or so are deemed developed, according to index providers, MSCI, S&P, or whatever. And the rest is emerging, frontier, whatever you want to call it, developing. So yeah, it's a very highly competitive story, and I saw this firsthand through my 30 years or so career, including when I led the Djibouti Sovereign Wealth Fund. When interest rates started to rise, not long ago, a couple of years ago, 2022, in advanced economies, then money started to be pulled out and away from the riskier assets, deemed riskier at any rate. But when I advanced, for example, the privatization of Djibouti Telecom, the national champion and monopoly, with a transparent and credible process, then global investors still engaged. And even in turbulent times, you can do things. Why? Well, it's because I think they trusted the governance. They saw a long-term story in there. So my advice is really to don't turn inwards, as some people would like to. I think you need to double down on the FDI, the importance of foreign direct investments, but make it smart FDI. I think you have to be selective yourself as an emerging country, aligned with your own long-term national development goals, not just short-term inflows in and out. And the winners are those emerging countries and markets that will offer credible reforms, transparency and diversification, not those who will retreat inward. So countries that strengthen governance, again, it's an important word, and the rule of law, they will attract, I think, sustainable capital, even in turbulent times, which is a constant now, because it's all about investor confidence. We talk about consumer confidence, but investor confidence in this case, and they're trusting where they are investing. So bottom line, I think in turbulence, credibility is the key and the new currency.
Yes. And as Ken's sort of experience suggests, that being able to have property rights respected is part of that credibility and transparency and governance structure. Absolutely. That will always be the point where FDI is, foreign direct investment is going to be attractive. So
that's the key differentiator, I think, in the end. I mean, there's so many criteria, but that would be right up there in terms of rule of law, feeling protected. I mean, not just size of population and growth market. That's the key thing to look at as a global investor, because you don't have to be in emerging markets, you don't have to be in risk assets, but if you want to, then you have to be selective, and vice versa. Emerging markets, I think, and their governments and authorities need to be also selective in terms of who to attract. Yeah. And Turkey is a great place, and it's had its own ups and downs. But I love it. I mean, if I were to rank, I mean, this is off the script, but top 5 cities to visit, it would be Istanbul would be right up there.
Note that, please. We need the tourism dollars. Thank you very much. Country. Okay, well, I appreciate that. But let's go to Orlando, to you. All of the kind of turbulence and all of the constraints right now and all of the risks apply to the work you do. But now on top of that, we're talking about capital projects. Really long-term investment. We're talking about especially sustainable capital projects, and there's the added layer of, do we want to call it scrutiny, backlash against ESG. How are you handling that? How is that changing the landscape for you?
So the answer is a bit paradoxical, because from the perspective of a development finance institution, the key principle for us is we're supposed to add value. So we're not supposed to intervene when there are similar financing options from the private sector. So we're really supposed to go and look for those projects that are not either getting the quantity or the quality of financing that they require. So certainly we face from on one side, the constraints, right? So everything that we talked about, especially the capital costs, and that of course shrinks the number of projects. It affects feasibility, right? What are the projects that can actually be undertaken? But the paradox is because from our perspective, when there's turbulence, when these conditions affect the market, we actually find more opportunities because then the private sector is less eager to intervene in some parts of the market, which gives us a little bit more space to look for projects. But certainly we see that we have to be, and many of my colleagues here use the word smart, and that's really the key. How do you apply this? Because things like environmental, social, corporate governance, integrity, that's our day-to-day. We have to apply those principles. Those are part of our mandate. But sort of a small digression there at the risk of sounding a little bit as an ad. We had that conversation with our governors, with the 48 member countries back in 24, between 23 and 24. And they approved a 3.5 billion capital increase for IDB Invest, but that comes with a very challenging mandate on how are we going to address these issues, which were identified by management, but also by our governors. So essentially we're changing the business model in many aspects. We're not reinventing the wheel. These are many of these initiatives are present in the market, especially things like risk transfers and us being able to take more risk on a transaction so that we can bring in private sector investment. But just to give you one example of what we're trying to do, when we started working, IDB Invest is a recent creation. It was the merger of 3 windows within the IDB group that were working with the private sector that happened in 2016. So it's not that far away from here. So we're changing our business model 10 years after inception. But one example is the local currency piece, and that really talks to how we can widen our reach with these infrastructure projects in the region. So when we started, we essentially had one tool. We had a bond program in Mexico. Now we have 23 different tools, and we are present in Colombia and in Paraguay and the DR and Brazil, etc., in many countries where we are able to provide local currency, and that has helped us sort of overcome part of the limitations that we see on the infrastructure side.
So in Orlando's world or in IDB, they've got the credit. What about credit in other places? The credit crunch is definitely hitting a lot of especially smaller investors and enterprises. So when these credit markets tighten, and we don't have the kind of the infrastructure that you have, how do businesses, is fintech an answer to this, Slim? Are there other ways that these smaller entities, private entities, can reach the credit that they need and the financing that they need?
I like the flow of the questions. Thank you. Well, turbulence does not just affect governments and investors. I mean, it does hit small businesses the hardest, typically. So when global credit markets tighten, yes, SMEs are usually, and unfortunately, the first to be cut off from funding. So yet, SMEs are the backbone of any economy. And if they're not, they should be. Many economies are not there yet. They have to keep pushing, and I think IDB and all the MDBs, the DFIs, etc., work towards that. And that's why, yes, during my time at the Sovereign Wealth Fund, but also as minister in government in Tunisia, I pushed really through the concept of fintech and crowdfunding. So we launched in Djibouti Inclufin, inclusion financière, which is in French, and we translate financial inclusion effectively, as the first crowdfunding and fintech platform. And it did give entrepreneurs and SMEs the ability to raise funds directly from investors as an alternative finance. This is what we're talking about here. And the first young entrepreneur, I remember it, who used Inclufin to secure capital needed to expand, they couldn't do it under the traditional, non-alternative financial or banking system. So fintech, yes, is a game changer. It's real, so yes, Dean Yeltekin, fintech models like Inclufin can be the lifeline, the game changers. And I'd say if Turbulence closes doors in global finance, I think fintech opens windows locally.
That's a very good. So we've all talked about smart investments. You've talked about sort of, we just got to adapt and move forward, and there are some opportunities even these turbulent times. So I think at least myself and probably many in the audience are wondering, and maybe we'll start with you, Belma. Where do you see new openings for U.S. companies globally, and what are some of the opportunities out there?
So I thought long and hard about this one, and I landed on AI because I thought it can't be a panel about.
We're trying to extract, by the way, free consulting here, yeah. So that's
why. So I thought to myself, well, if we haven't mentioned AI by this point in the conversation, then certainly I should be the one that brings it up. I bring it up because there's companies like OpenAI and their Stargate project. It's $500 billion to set up data centers. There's an effort to take this international. It's not just well, at the moment it may be a line in a budget, but it may turn into something quite real and substantial very soon. And the reason I bring it up is, it's many markets outside of the U.S. And it will require a whole stack of industry to come together to make this happen, to make it a reality. You have to pour concrete to make a data center. You need engineers, and you do need some consulting to think about what all of this will look like. You need energy, which is top of the line at the moment when we do talk about AI. And so there's kind of multitudes of opportunity, whether it's U.S. companies or whether it's companies actually in those markets where these projects may be undertaken. I think it also, to go back to where we started on kind of that fragmentation piece. The reason we're talking about any of this is really, the U.S.-China component to it. And so as far as where the opportunity will be, even if it is international, it'll most certainly be in markets, in countries that are U.S., kind of part of that U.S. umbrella, if you will. I think OpenAI named it democratic artificial intelligence. So we'll see what that plays out. But as I say, I thought about this, and here we are. AI is something that we should speak about.
That's great. Definitely. And what about you, Salim? Where do you see some over-discounted opportunities, regions?
The sky is the limit in terms of choices. There's lots of opportunities out there, but yes, you had the first mover advantage with AI, so I give it to you, but we have to talk about AI, definitely. One of the paradoxes, I think, of turbulence, which is the theme, world upside down and turbulence, the theme of this, well done for cyber, I think GW-CIBER for that, and the IB department to raise the flag. So one of the paradoxes of turbulence is that it often creates opportunity, yes, where others only see risk. So entire regions, I think, can be mispriced and treated as uniformly high risk, no go-to territories. And that creates openings for patient investors and patient capital, as we call it. So yes, for example, Africa, I think, is a perfect case there. If you look at the world map, and I think the world map represents Africa, which is a big theme today in terms of size and landmass. But too often, Africa is painted with a single brush stroke there. But it's 54 countries. That's a lot of countries. 54 diverse markets. And some are already converging towards the global, I think, economy, just as Eastern Europe, Eastern European countries did, converging towards Western Europe. It's just a matter of when rather than if the rest of the world does that. And then there is frontier Asia, of course, in places like Vietnam and Bangladesh. I think they benefit from supply chain shifts or the China plus one policy for the case of Vietnam, etc. So turbulence for some has become a tailwind, but an opportunity for these countries. And turbulence may scare some away. Again, investment is about risk-taking. But for others, I think it's an entry point into the next growth frontier, and investors who can see through the short-term noise, they will definitely find, I think, long-term value where others only see volatility. So that's my 2 cents for it.
What about you, Cam? What do you see in your world? I mean, obviously, you're very familiar with the Eastern European markets. And
Well, we've looked at other places. We considered Africa. We were invited. After we grew to a certain point, we started being contacted by people in other countries saying, can you come here and do the same thing? And Africa was very intriguing and interesting, except that we were concerned about, one, the stability, that we could go in there and then a year later, the government would change and we might get kicked out. It was difficult. We have no debt. That's probably unusual for most businesses. But when we started out, it's almost embarrassing to say this, we were so damn successful and generated so much cash that after our initial input of capital to get started, we never put another penny in again.
Oh.
And we grew the company from internal cash flow. So to take that cash and then risk it in another country, the only way we would do it is if we could find a local partner.
Or a good advisor. Or a good advisor.
And everybody was, oh, we thought you would just come in and do it. So no, you have to have skin in the game. If you're not willing to put some money into it, put some of your resources, we're not going to just show up. So there were a number of opportunities we turned down because of that. And of course, our market has changed. Our business has shrunk. I mean, the need for copy centers, and if you remember Kinko's and all of those, where are they now? You don't see them anymore. So our whole market has changed, and we've adjusted to that. And frankly, most of us are older now, and we're happy with the way things are. So we're no longer really looking for other opportunities. But up until about 10 years ago, we were. It was finding stable governments in places where we could get equipment in and it could be serviced. I don't know if any of you have ever had a copier or a digital printer. We probably have a laser printer or something. But they need service.
yeah.
And if you can't get a technician on site quickly, you're out of business. So we needed that. So we needed the support from the manufacturers. It just was frankly too difficult to go to some of these places that I knew had great potential. But the rest of the infrastructure, the financing infrastructure, the real estate infrastructure, we needed electricity that was on all the time. We needed air conditioning that worked. I mean, it just became difficult to go to some of these places where if we hung out long enough, probably would turn out to be great successes.
Yeah, absolutely. Well, what about, I mean, you have many member countries and you're seeing them from many, many dimensions, and obviously you're involved in large sort of projects, and infrastructure is a huge part of being able to move, whether it's equipment, whether it's intermediate goods, whether it's something else. So where do you see, if only these things could be developed, there would be a big boost to productivity, opportunity?
So I asked my colleagues in the research department, what do they really see on this issue of trade? Because that's a key indicator. What they see is that it's not just simple fragmentation. They think that in the region it'll be more of a trade around regional hubs. So certainly a regionalization of trade. And they see a lot of opportunities there for Latin American countries, especially in this issue of nearshoring. And, but the countries are not there yet. So that's really the challenge for us. What can we do? And what we've been trying to do is to get closer between the public sector and the private sector, to try to speak the same language and try to work together in things like upstream work, for example, help on the regulatory framework, and have a better dialogue in terms of what do we really need from the private sector point of view, so that other opportunities can open. It's not an easy dialogue. Again, IDB Invest is relatively new in the context of the IDB group, but we've been making progress. We've, for example, unified our view in terms of the country strategies to try to really, what are the things that we can do together to solve some of these issues, and not just for us, not just open opportunities for IDB Invest. And we also don't think that globalization is gone in any way, shape, or form. It's just looking for a new equilibrium. And that part is where I think we can help, especially obviously in the region that we work in. So those are the aspects that we are trying to improve, and especially because the main objective of what we're trying to do now is we have, I think, the inventory of relationships that are, especially banks and other investors that are willing to come to the region with us. It's in the 250, 300. Most of those are outside the region. So the question is, what is it that we need to do to incentivize those investors to continue coming in the region, independent of what the situation is right now? So I think that's the big challenge. How can we put together the pieces between the efforts on the private sector and also the efforts that the public sector organizations, the same issue with World Bank, IFC, or the regionals that have these two sides. So
obviously, we're hearing a lot of news about tariff wars and retaliations and geopolitical risk. But what we're hearing from a lot of you and all of you is that there's this appetite to continue to engage, to continue to do business across borders, to continue to reach other markets and find opportunities, if it's not in the traditional settings, in some of the more, different new technologies, whether it's coming through fintech, whether it's coming from a government-private joint enterprise and so on. So that new equilibrium, what does that possibly look like? Hopefully it doesn't look like it's just everybody takes their bowl and go home and hunkers down. Is that what you're saying too, Ken, from your perspective?
You just have to be flexible.
Yeah.
I mean, the countries change. The changes we're seeing now are different than the ones we've seen in the past, but they're just changes. And if you can't remain flexible and adaptable, you're going to fail. If you stay rigid, you're not going to make it. Just a quick example, we were always amazed that none of the big franchises or big copy shop chains came into our market. We figured this is a great market, aren't they going to see it? And one company tried, I'll leave their name out, but it's a name of one of the major chains, and they failed. And the reason they failed is they tried to stick a US model of a facility and expected the customers to adapt to it. They weren't flexible. They didn't know their customers. They didn't really know their needs. They just put the same thing they would put on 20th and K. They stuck in the middle of Budapest, and it failed. In fact, they tried it twice, and it failed both times. So you've got to remain flexible, adaptable, and continue to keep your fingers on the pulse of your clientele so that you're adjusting to what their needs are. Otherwise, you're going to fail.
Yeah. Well, other than flexibility and all the things that we've mentioned, maybe Selma and Slim, you would like to add on to how should our alumni, our students adapt in this world of turbulence, change, political risks, and
Yeah, I'll take it as a as an alumni. I think Orlando started at the top. He said, GW is the reason, kind of taking the path and the career that you have. I think collectively as students of international business or students of international affairs, I think we all there's a reason why we chose to study and to pursue an academic career in that space, and that's because ultimately we all want to make sense of uncertainty. I think there's something about the world that we want to understand, and we want to be able to articulate what that uncertainty is. And so I guess my main piece of advice for anyone that's looking to tap into this world post university is to really hold on to that mentality, to that drive, because that's what's going to give you, I think, the creativity that you need to be able to act flexibly in moments of pressure, or to navigate what is a very, very ever-changing system, whether it's the economics or whether it's the way that business is run. Yeah.
Slim, anything to add as advice?
Well, yes, definitely. I mean, first of all, really thank you to all the students around here. I mean, it's impressive to have this number. There should be more, I would have thought. So well done to all those who are in here. Thank God it's Friday, I know, but you're here. And I think it's amazing. I think from both sides, having been on the other side of the classroom and having alumni around here, I think it's, thank you once again, Dean Yeltekin and the Business School and GW-CIBER for doing it. But as students preparing, I think for your careers, you are entering a world that is, I'll have to say it, more uncertain than ever, but each generation will say that to the next one. It's more uncertain than ever. So, with geopolitics, technology, AI, definitely, climate and demographics, more than 8 billion people and growing. An extra 300 million people are born in Africa alone every decade. It's just going through the roof in terms of, so the competitiveness is there. So all of this is reshaping the global economy faster than I think at any point in history. And my advice is, don't worry, be happy. It's a song for those who have gray hair. I'm sure you remember it. So don't try to avoid the uncertainty, I think. Instead, build agility into your career so that you can thrive in it. And I've lived this firsthand, from London's financial sector to Tunisia as a government member, minister, then to Djibouti leading sovereign wealth funds. So, and every step came with its own share of turbulence, but also with its share of opportunities. And remember, finance is global. So our careers, doesn't have to be in finance, but any career could be global, and I think this is a testament to it. So your path may take you across borders, sectors, and even roles you don't yet imagine. Avoid the mafia. Don't get there. And it's a bit like any relationship. I mentioned it when talking about investments. You do the dating bit, then you do the engagement, and then you get married. You don't have to get married to your job. So, you do the engagement, get to know it, get to like it, and if you don't like it, you move on. Maybe you get engaged. But anyway, so that's one way to end, saying that what looks like turbulence today can actually be an opportunity tomorrow. And for me personally, GW definitely gave me the tools. The world and life gave me, I think, the turbulence and the challenges. But then experience and leadership, I think, is what allowed me to turn turbulence and challenges into opportunities. So thank you.
Orlando, you have the last word.
You got me thinking. So I think, two things. You have to trust in what you already know and act on it. You're supposed to be flexible and continue learning even years after you left school. You're supposed to build bridges, not walls. All of this. The question is, how are you going to act to put in practice what you know? But what I can tell you is, I I come from a very little country, Paraguay, an island surrounded by land, as we call it. If you had told me that I would be here 20 years ago, I would have told you you're crazy. There's always something to do, and I think Turbulence is actually good in that sense because it gives us a clear signal that there are things yet to be done. I think when that stops is when we should worry, not about the turbulence. We should worry when there isn't one, because that might indicate that there isn't anything left to do. And there, I can certainly tell you that there's a lot to do.
Well, on that very, very positive note, I want to thank all of our panelists for being here today. We really enjoyed the conversation. Thank you very much. And I think we have used up all of our time. So I think we're now on to our keynote speeches. So thank you very much.